Hey, how you doing? Alan and Lisa. Nice to see you again. Happy New Year. Welcome to the fourth installment of Tax Tip Tuesday, where we're going to continue our exploration of the 2017 Tax Cuts and Jobs Act and how it's going to impact your 2018 and near future tax returns. One aspect that we're going to touch on today is actually retroactive to January 1st of 2018, and that is the big impact on and major changes on deductible meals and entertainment expenses. You know, historically, meals and entertainment expenses have been 50% deductible. In other words, you have a $100 bill, you get to deduct $50 of that expense. That's been the historical perspective. There's been a few minor changes in that regard, but the big ticket item is going to be entertainment is gone. No longer deductible, retroactive to January 1st, 2018. Meals and entertainment expenses at 50% are for qualified business meals that are incurred in the trade or operating of a legitimate business. There's a few incidences where 100% deductions are available if it's an employer-employee relationship, and then there's higher percentages as well for those in the trucking industry. But effective January 1st, 2018, the entertainment factor is completely gone. You know, if you think about it, most accounting software packages, even your 2017 tax return, if you're a sole proprietor on Schedule C, line 24B said deductible meals and entertainment. The 2018 Schedule C has been revised just to call it deductible meals. QuickBooks, Sage, any accounting software program historically has a line item, meals and entertainment, and once again, that's probably going to require some changes too. What is that going to create for you in a way of change? I've got a couple different tax tips on that, and I think it's very important that you pay attention. Also, the IRS Notice 2018-76 has a lot of details with that regard in accounting for deductible meals. The entertainment feature is gone. So that means to prepare your 2018 tax return, before you go to your tax preparer, you really should go back and break out your deductible meals from everything else, other meals and entertainment, because really those no longer will be deductible. Sure, you can go out and generate goodwill by taking somebody to a sporting event, buying them lunch, discussing business, but you're really going to have to account for the meals function differently from everything else associated with that function, whether it's a football game, golf tournament, you name it. The second one being, I would suggest looking at opportunities where you can still take a 100% allowable deduction and generate that goodwill that entertaining affords. Consider this. You have a customer, he may have kids in a youth program, softball league, baseball league, soccer league. Consider sponsoring that league. Think of the exposure that you're going to get. Think of the goodwill that you're still going to be harboring with that customer or client, and think of the number of people that you're going to be reaching out to. You know, the IRS gives us great opportunities in the allowable tax system that we have now, that you can go out and look for tax deductions without being so creative to the point that you're crossing over to the dark side, so to speak. So consider everything that I just said, but going forward, you've got to really think about breaking out the meals from all the entertainment, because at this point in life, it is no longer deductible. Alan Lee's a CPA. Happy New Year. Have a great day.